AMC stock is casually sitting here up 22.5% on the day. Some people are going to say this is because speculation of a takeover from Disney or Amazon, but the truth is nobody exactly knows. But I don't think that is wrong, and we're going to get into exactly what I mean by that here in this video. And does it even matter if it's right or wrong if it's producing an almost 23% rally in the stock, guys, and certainly causing the shorts to sweat their asses off. So let's get straight into it. You guys know the deal. Hit that like button, subscribe to the channel if you guys are in AMC, if you like AMC, if you like these kind of videos. Do that for me. Thank you guys for doing that. If you guys also want to take it a step further, come trade with me live in real time as well. Link down below in the description of this video. So first things first, guys, let's talk about what is producing this outsized move today with AMC. And when you try to just search and figure out what's going on, you're not going to uncover anything. There's literally nothing on this rally that you are seeing. And where it really started was over on Bloomberg. Yes, the Bloomberg terminal, the one you have to pay $24,000 a year to be on. Some people are commenting, even hedge funds, right? Those are the guys that are really on the Bloomberg terminal, or people with a lot of money, I guess. They're starting to talk about AMC in the light of an acquisition, and that is something that is a little bit different. Typically, if AMC is up 23% in a day, there's something you can find on the stock. It's not Bloomberg speculation, and Bloomberg speculation tends to be a little bit more insightful and leads me at least to look at it a little bit different. So it wouldn't surprise me if there was some kind of takeover acquisition around the corner, really, but either way doesn't matter if you're going to see these kind of moves. And you're obviously seeing shorts getting squeezed out of their positions at least a little bit today. Now the stock's up 26%. These moves are shorts getting squeezed out. This move and this move is shorts getting squeezed out, especially when you see that volume come into the stock in such a big degree. When you're seeing $500,000 candles or $1 million candles, you're getting some shorts covering, but you're also at the same time getting some shorts taking on new positions. So I wouldn't get that confused. It's not like all the shorts are running for the exit right now, which we'll see tomorrow. If the stock continues to perform the same way, then maybe we could say shorts are covering in a big way. But there's a lot of back and forth, right? There's a lot of shorts covering, then they flood into new short positions, right? So there's a lot of that going on back and forth. Now let's go over some of the Ortex data, guys, and give you guys the scoop of what is going on here. And if we look at the option flow activity, 53 orders totaling $3.49 million, positive order value of 68%. So that is certainly looking good. And you are looking at quite a bit of calls that are going to be expiring relative to puts coming tomorrow. So also interesting, and you have seen virtually all of these option expirations have turned to an overwhelming majority of calls. 66.5% calls for December 16th, 33.5% puts, and that's pretty much the same ratio you're seeing for a lot of these expirations. So looking incredibly bullish as far as the option activity. And as far as the cost to borrow rates and the actual short interest not moving around all too much. They are saying that about 500,000 shares were covered today, and that would be about appropriate, right? There was 100,000 shares sold short. Now you're sitting at 109, or did I say 109,000? 110 million shares that were sold short. Now you're sitting at 109.69 million shares sold short. So when you say 500,000 shares covered, people might say, oh, wow, that's a lot. No, it's not. In the grand scope of how many shares are sold short, it is nothing. Live short interest of free float sitting at 21.28%. Cost to borrow average sitting at 43.19%. Cost to borrow maximum sitting at 62.25%. And cost to borrow minimum sitting at about 10.5%. And you could see the shares that are actually being lent out today are around that 39 to 40% range. So all of this data looking very encouraging. And if you take a look at this on a technical basis and you pull up the daily candlestick chart, you obviously want to see AMC close above these next key moving averages. And where are we currently at right now? We are above the 100-day moving average. We peaked out almost exactly where the 200-day moving average is. So you want to close above the 100-day moving average, and if we do by the last couple of minutes of trading, or by, you know, even after hours, if we can close above $8.64, then you're probably getting that gap up above the 200-day moving average coming tomorrow. Now, we also have to dive into external factors besides AMC that will be affecting the markets, like data. We're going to get a lot of data coming out tomorrow. And a lot of people are talking about the big money is waiting for the data tomorrow. And that's why we didn't see such a big move today, because you did have good data. And if you read this headline, it says key inflation measure that the Fed follows rose 0.2% in October, less than expected. The core personal consumption expenditures price index rose 0.2% in October, slightly below the estimate. The index increased 5% year over year. Personal income jumped 0.7% for the month, well ahead of the 0.4% estimate, and spending rose 0.8% as expected. Weekly jobless claims totaled 225,000, a decline of 16,000 from the previous week and below the 235,000 estimate. Outplacement firm Challenger Gray and Christmas reported that planned layoffs increased 127% on a monthly basis in November and were up 417% from a year ago. So you are getting some, I would call it more bullish data than not, especially the core CPI that rose less than expected. I think that is a very positive thing, but big money is not going to react to that. They are going to react to the unemployment rate for the month of November coming out tomorrow at 8:30 in the morning, and the non-farm payrolls for November coming out again at 8:30 in the morning tomorrow. And you could see the forecast is for 3.7% unemployment, and that's what we got last month. And then we are expecting non-farm payrolls to come in at 210,000 jobs. Last month was 261,000 jobs. And I think the non-farm payrolls is what could really get things moving a little bit. I don't think the unemployment rate is going to move all too much. If that goes to 3.8, well, that's going to be very good. If it goes down, obviously it's going to be very bad. You'd have to question the data if the unemployment rate actually went down, though. But I think with the non-farm payrolls, there's a lot greater chance that this could come in at 120,000 or 150,000, much less than the 200,000 job expectation. And if that happens, that is going to be massively bullish for the stock market. And I think that would produce, 2 to 3% rally in the markets. But if it comes out at expectations, 210,000 jobs or even more than that possibly, well, that's going to be very negative, guys. So there's a lot of money waiting for these data points tomorrow, and depending how these go, that is how you are going to see people actually positioning their portfolios. So that is pretty much going to be all for this video. Not too much else to actually add. It wasn't a crazy day today. You already had Fed Jerome Powell yesterday, and he basically gave us the game plan, right? If inflation keeps looking good, we're gonna be okay, right? And the stock market really like that. If things go sour, next month's data comes in bad, well, we don't know where we're going to stop raising rates. We're just going to slow down, but it could be 5% or it could go higher than that if the data does not comply. So the markets really did love that. There's a lot of assuring signs that inflation is coming down, and that is partly why, really the big reason why I should say, the markets have been rallying over the last day. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.